Good evening, friends. I wanted to give you a brief outlook on the Indian stock markets. There is a lot of fear in the market that tomorrow the market is going to open hitting lower circuit down. It can happen. I will not say that cannot happen because the GIFT Nifty is indicating that. And we are comparing it to the US markets. US markets have fallen 5%, 6% last two trading days. But you need to understand that Nifty has already corrected a lot. If we compare the US indices that has corrected from its absolute S&P 500 has corrected until now 17.8%. 8%, whereas Nifty 500 has corrected 15.6% already, the difference being 2.2%. The Dow Jones has corrected 15.2%. Nifty 50 has corrected 13%. The difference here too is only 2.2%. Why are the markets falling? The markets are falling starting from Trump tariffs, but the fear of recession in the US, not in India. Of course, it is going to affect the economies all over the world, but not a recession in India. So why are we so fearful? We have finished our corrections. Nifty is in an undervalued zone already. It's undervalued. So we are in a consolidation zone. Maximum, I think, even after the down circuit, we should start recovering and finally end with just a 2.2% fall. I discussed this with my students too. My students looked at the charts, and whatever we studied, we could see that it is not so negative as the fear in the markets, the fear of the unknown. That's because they have studied too. We saw the PCR or the put call ratio is at 0.76%, which is more towards the oversold zone. So if it is going towards the oversold zone, we will see a recovery. Even the open interest that we did see was that there is a major support at 22,500, whereas the resistance is at 23,300. So therefore, then we had a look at the charts. At the charts, one student said it's making an inverted head and shoulders pattern. The other student said that it's making a double bottom. These are positive patterns that we see in charts. So we are all having a positive outlook in this very bear market scenario. How are we looking at it? I just wanted to give you a brief look at the same. If I could just share my chart with you. This is what they are seeing is the markets have fallen right from, this is of course the entire market fall. And then if we see this from 23,800, it fell right up to 22,100. Then rose again found resistance at 23,800 and is falling again it is right now to 900. We anticipate or we expect the fall tomorrow to be again very bad. Even if it falls right here and then starts recovering, we will see a W pattern recovery. And this is not going to happen tomorrow. This is going to happen in the coming weeks. But in the coming weeks, we see this, we are almost bottoming out, and we are going to start seeing recovery soon. I'm not saying we are going to be bullish. Neither are we going to be bullish, neither are we going to be bearish. Also, another student said that I can see an inverted head and shoulders. This is another bullish pattern. Markets are falling, recovering, and again falling, waiting for it to recover again. And once it breaks this resistance line or the neckline, we will start seeing the movement upwards. This all can be seen because we see the broader picture. If we see the broader picture of Nifty, this is how the Nifty went up right up to 26,000 and then started falling. After it started falling, it is right now in this zone, which is called the accumulation zone or the sideways zone. Here, what happens in a tight zone of 22,900 and this particular zone of 21,000, even 21,000, it'll just move up, down, just the way, if you can see on the left-hand side, how the candles move for weeks together before making an up. So till the negotiations are on the table, till the tariff negotiations are on the table, the movement will just be someday up, someday down, someday up, someday down. You do not need to be bearish. This is how the stock market moves. You need to be invested in sectors which are showing resilience. For example, please do not go and invest in sectors which are in the news like autos, metals, farmers. Go in for banking, which is showing resilience. Go in for FMCG, which is showing strength. Go in for those stocks and keep in mind that money, of course, is made in the bull market. But wealth is made in the bear market. You just need to know which sector to invest in, which sector is resilient, and not to have fear. All this you can overcome fear, overcome greed, these kind of things, if you acquire the skill, because you always have the fear of the unknown. I am starting my course starting 21st of April. You're most welcome to come and join me in this course, where you will be learning fundamentals, where you'll be learning technicals, you'll be learning market dynamics and psychology. Look forward to seeing you in our course, where you will have confidence and competence in trading and investing in the market. Thank you.